yesterday. I'll note we do.
Amazon numbers out.
We're going through those results.
Amazon
right
out.
How does it speak to how we are once again poised for the
Amazon rolling 166?
Continue to lead the division. What does it mean in terms of some of those high expectations, high hopes going into the print here?
I mean, the hyper attention on every
dollar
in the stocks and how the earnings come in versus the vague expectations.
170.
Longer term trends mostly confirmed, both with the economy and with the large cap tech stocks. I'm most interested in the differentiation.
170.
You want to see them move one by one and not as one big blob.
Mike, we have the results for Amazon.
Oh,
we're going to go to Tony right now for those numbers.
Hey, Morgan, so it's a beat here on the top and bottom line for Amazon and its fourth quarter EPS. It's 20 cents better than expected. Amazon's revenue, $170 billion. Street was looking for $166 billion. Looks like it's a slight beat on the Q1 revenue guidance. The midpoint may be slightly light here. They've got $138 billion to $143 billion on Q1 revenue guidance.
Nothing's
Street was
wrong.
looking for 142. AWS growth, this has been a key number the Street was watching. 13%, right in line with what Wall Street was expecting. And we're going to keep looking through this for more guidance, guys, and a little bit more color. But beat there on the top.
Right, baby.
Okay. Kate Rooney, thank you. We'll come back to you when you have a little bit more. Dan Ives, I see you nodding your head. You're in.
That was the key. I mean, I think fears you'd have 11, 12% growth. You saw 13. It goes to really the debate here. I mean, you have Redmond leading, of course, where Google is in the cloud. Where's Amazon? You're starting to see re-acceleration. This is going to be the focus for Jassy on the call.
Paul Hickey, for Amazon, North American segment operating revenue.
They blew it. They blew it out of the water.
Looks like
they blew it out of the water.
Strong, $105.5 billion versus $103 expected. That's for the revenue on the top line. International revenue also a little bit stronger than expected.
AWS
We just talked about AWS. Does this kind of stack up well enough in your estimation versus what we just saw from Microsoft, which really outperformed across just about everything?
Yeah, no, I think 13% they hit the AWS number right on the dot. The North American sales strong, and what you're seeing is Amazon able to, they put in all that investment over the years, and they were, the stock was punished for that. But now, they
Meta 417
earnings by 20 cents. They're reaping, those investments now and benefiting from it. So that's an important thing to watch. They've continued to invest over time, and it stands to their benefit. And making the cloud numbers, which some were a little bit worried about, right at 13% on the dot, is certainly something that people can take heart in.
Yeah, Victoria, I mean, it was Amazon Web Services. It was a report card on the holiday retail season. And we have commentary here from Jassy saying that Q4 was a record-breaking holiday shopping season. And then it was also the advertising business, which we know is growing very quickly for Amazon. Shares are up right now, almost 4%.
419. 419.99.
Read on this report.
423.
What we've heard so far, your takeaway. We've got more details on Amazon. In the meantime, we're going to go back to Kate Rooney for those headlines. Kate.
Hey guys, yep, so we brought you the top and bottom line. That was a beat. Operating margins we have here, that came in at 7.8%. Pretty big increase from 2% about a year ago, but it was flat sequentially, so quarter over quarter, it was flat. We've also got operating income for AWS, $7.2 billion. That was better than expected. Digging into the numbers, most of these segments are significantly better than what the Street was looking for. Ad revenue included, $14.65 billion. That was a beat. North American revenue, $105.5 billion, stronger than expected, and that segment was up 13% or so year over year. It also looks like international revenue came in well ahead of expectations at $40 billion. And those are some of the other details here, guys. But again, a strong quarter, and you can see it reflected in the shares here of Amazon after hours. Back to you.
Yeah, up 4% right now. Kate Rooney, thank you. What's interesting to me, Mike Santoli, is that Amazon has laid out a lot of detail, more detail than I can remember seeing in the past, particularly around some of their AI initiatives. One of the other things, though, that they have broken out here is actually their space ambitions, because they said 100% success rate for Project Kuiper's proto-flight mission, and actually talking about a private connectivity service with AWS that's going to allow customers to send data from remote locations.
We're going to space,
the
baby.
Cloud without relying on public internet, and naming some collaborations tied to that too. It speaks to the fact that, and you can make this argument about advertising too, with that revenue a beat, that they continue to expand their octopus arms into different revenue channels and different businesses, and do so very robustly.
Yeah, an Amazon earnings release, you have to get through all the bullet points of, by the way, we're also doing this.
Yeah,
and it's
a
lot
lot
of expressions of limitless ambition and capacity. But you're right that they basically do want to accentuate the fact that, first of all, we're going to say it's all for some customer. We're all serving a customer in a better way. We're obsessed with that. They say it explicitly. And then, you kind of just get caught up in this idea that they've probably thought of it before the next guy has thought of it. And, meanwhile, they're also delivering on the bottom line. So they can talk about the 12-month trailing free cash flow.
Six figures after hours.
$38 billion. That was up from the prior year. And meanwhile, that's even as we invested in all these different areas. So it's a familiar story, but it's a comforting one, I think, if you've owned this stock. Now, the numbers are going to go up. Like the estimates are going to go up for these two companies. Don't be surprised if Amazon's 170 plus here soon. And that means, as much as the stocks are going up, they're following the fundamentals. And that's one of the reasons that the Mag 7 has become the Mag 7, is because at least in this cyclical environment, they're kind of dominating the production of earnings growth as well.
Okay, Rohit, switching gears and going now to Amazon. AWS hit the expected growth at 13%. But I wonder more your thoughts on costs here, because a couple of years back, Amazon was in the thick of it with having overbuilt and overhired during the pandemic in the logistics network. Now we're starting to see efficiencies build with that scale. Andy Jassy has even been talking about how when you reach a certain level of efficiency, even in same-day and next-day delivery, that gets cheaper for you. How does that play for investors in this particular economic environment?
I think Amazon is a slow-moving freight train that they're slowly moving into the right direction, and acceleration is the name of the kind of earnings that I would highlight. Look at e-commerce is accelerating, third-party sellers is accelerating, advertising is accelerating, subscriptions are accelerating. So everything is accelerating and going in the right direction for Amazon. On top of that, almost the 2-year process of reducing their cost basis is now starting to bear fruit. Last time we had checked that when they built out their fulfillment center footprint, almost more than what they've built in the last 15 years, they built that in 2 years. They probably need around 2 to 4 years.
Apple earnings, 4 minutes.
So I think
4 minutes Apple earnings.
Mark where Amazon is now going to show leverage in North America
4
retail,
minutes.
in international retail.
Apple could sour the mood, by the way. We'll see.
Okay, Scott, it looks like we're having a little trouble right with your shot there. Scott, still on Amazon, how much do we need to be worried here about an investment cycle?
Only thing I'll say is if Apple, for any reason, comes in and smashes it, oh my gosh, we are really going to be off to the races at that point in time. I'm kind of expecting Apple to sour the mood. We'll see.
Jassy, where he's going to telegraph that and not surprise us.
Yeah, I'm not too sure about that, John. Amazon has never been shy about, committing significant amounts of capital over the longer term. I focus predominantly on the AWS and advertising businesses, and I have to take issue
446
with the
Meta
that,
now. 446
AWS here has been a huge win.
I told you it was coming for 450.
Yes, they saw acceleration in growth. They met some forecasts, but if you look at Amazon and AWS, the growth pales in comparison to what Azure put up just a couple of days ago. And I think there is a significant question around market share shifts over the next couple of years. I think people are best suited perhaps to look more at the advertising business, which grew at a 26% rate, 15 billion in revenue. The advertising business, according to...
Hey, chat, if you own Amazon or Meta, flip some flapjacks for me. And if you own Apple stock, put some Tom Lee emotes up, okay? Flapjacks for Amazon or Meta, and then Tom Lee emotes if you own Apple. Okay, let's jump on Amazon now. Just start.
Geopolitical conditions and customer demand and spending, including the impact of recessionary fears.
172
inflation,
at the start. Let's see where it finishes.
Regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $170 billion in revenue, up 13% year over year, excluding the impact from foreign exchange rates. $13.2 billion in operating income, up 383% year over year, or $10.5 billion, and $35.5 billion in trailing 12-month free cash flow adjusted for equipment finance leases, up $48.3 billion year over year. While we've made meaningful progress in our financial measures, what we're most pleased about is the continued customer experience improvements across our businesses. These results represent a lot of invention, collaboration, discipline, execution, adjusting, and reimagining from teams across Amazon. Gen AI is and will continue to be an area of pervasive focus and investment across Amazon, primarily because there are few initiatives, if any, that give us the chance to reinvent so many of our customer experiences and processes, and we believe it'll ultimately drive tens of billions of dollars of revenue for Amazon over the next several years. In addition to our stores and AWS businesses, we continue to make progress on newer business investments that have the potential to be important to customers and Amazon long term. Touching on two of them. In October, we hit a major milestone in our journey to commercialize Project Kuiper, which is our low Earth orbit satellite initiative that aims to provide broadband connectivity to the 400 to 500 million households who don't have it today. We launched 2 end-to-end prototype satellites into space and successfully validated all key systems and subsystems, made a two-way video call, streamed a Prime Video movie in Ultra HD 4K, and made an Amazon purchase over our end-to-end communication network. It's rare to be able to exercise all these elements in an initial launch like this. We're on track to launch our first production satellites in the first half of 2024 and start beta testing in the second half of the year. We've still got a long way to go, but are encouraged by our progress. During the quarter, we also completed our second season of Thursday Night Football, which was a rousing success by all accounts. The customer experience continued to improve as our talent, production, streaming quality, analytics, and unique AI features like Prime Vision and defensive alerts all took big leaps forward on top of their very good start last year. We launched a new NFL tradition with the inaugural Black Friday football game, and our continuous innovation resonated with viewers as the number of people watching increased 24% year over year, and with advertisers as we made dramatic year-over-year gains in ad sales. We have increasing conviction that Prime Video can be a large and profitable business on its own, and will continue to invest in compelling exclusive content for Prime members like Thursday Night Football, Lord of the Rings, Reacher, Mr. and Mrs. Smith, Citadel, and more.
Mr. and Mrs. Smith, that is a great movie.
In Prime Video,
that's a classic.
We'll be able to continue investing meaningfully in content over time. I'll close by reiterating that 2023 was a really good year, and I'm grateful to all of our teams who delivered on behalf of customers.
One thing I'd like to highlight in our first quarter guidance is that we recently completed a useful life study for our servers, and we are increasing the useful life from 5 years to 6 years beginning in January 2024.
Yeah, in terms of Amazon stock, really weird, because when the numbers first came out, it was only up 3.5%. It was like super strange. Like, I was surprised it was only up 3.5%. Like, the numbers were out, 3.5%. And then all of a sudden, like 10 minutes after that, 20 minutes after that, the stock started to finally move, like for real. Because it was just kind of made that little initial move, and then that was kind of it. And it was kind of like, really? Off that big beat? Then it started making another big move. Now a downward move. I don't know. We'll see where things shake out tomorrow. But all I know is everybody and their grandma is going to be snapping up shares of Amazon. So any dips that we get tomorrow, if there are any, even small dips, will be bought right up. Amazon conference call, obviously good as well. They gave a lot of detail, I thought, there about AI, about AWS, about getting growth rates back. It sounds to me like all the big cost-cutting measures when it comes to from companies doing cost-cutting is now over. That process sounded like it really started in 2022, and then it finished out in 2023, right? And so it sounds like to me, AWS is really just growth for a while. To me, it sounds like AWS is just going to be very strong growth until we have the next big recession. And predicting that's impossible. So, all right, guys, let's start going through this Amazon numbers first and foremost. Okay, so it always starts out with kind of the most broad numbers. Are they beating analysts' expectations or not? And what I told you guys is I thought Amazon was going to knock the doors off. I told you I thought they were going to blow out their numbers, and they were going to crush analyst expectations. And sure enough, they came through and they crushed analyst expectations. They came in with $1 of EPS. 80 cents was expected. So if they would have came in with like 84 cents, 83 cents, something like that, it'd been like, okay, they slightly beat. A little beat there. Coming in with $1 just smashed it. And then the revenue was even more shocking. They beat by nearly $4 billion. Billion dollars. I mean, that's incredible, okay? So they knocked the doors off. Phenomenal from that standpoint, okay? But to go through the nitty-gritty here, okay, let's start going through this. So they did nearly $170 billion in revenue in the quarter. In a 3-month span, nearly $170 billion. Now, the most shocking thing of that is I was kind of looking at projections for next year. I think there's a decent probability they're going to be over $200 billion of revenue in this same quarter next year, in Q4, which is crazy to think because, no company's ever done over $200 billion in revenue in a quarter. And I think it looks like pretty probable that Amazon's going to be the first company to ever put up a number like that, which is just mind-blowing number, right? Yeah, if I recall, Walmart was the first one to ever hit $100 billion in a quarter. But yeah, when we start talking about $200 billion in a quarter, that's just wild, okay? In terms of our North America segment, that was $105 billion there, $24 billion AWS, and then $40 billion international. This is on a trailing 12-month net sales. They did $574 billion in revenue in the trailing 12 month. Now, this is pretty fascinating because this is during a bad year. This was a bad year for Amazon in terms of their growth rates and everything. You had a consumer that had been sliced and diced by inflation for the last 2 to 3 years, right? That they had to deal with in 2023. You obviously came off of Rona and the super growth rates that we had during that particular time period. And then simultaneously, AWS, their growth rates were in a very bad place for much of 2023 and part of 2022, but especially 2023, because a lot of companies started to have to cut back immensely on their AWS spend. And that hurt Amazon numbers as well. So it's phenomenal to see them put up in a bad year, $574 billion in total sales. Like, that's incredible, right? Now, in terms of operating income for the company, it went to the moon. They went from $2.7 billion of operating income in the same quarter last year to over $13 billion of operating income in this latest quarter. That was up 383% year over year, up 379% on an FX adjusted basis. It's just unbelievable. Operating income on a trailing 12 month went from $12 billion to almost $37 billion of operating income on a trailing 12 month. That's up 201% year over year. Net incomes might be the most crazy of all of them, okay? From $278 million in net income in the same quarter last year to $10.6 billion of net income in this most recent quarter. That's pretty nuts, okay? Now, on a trailing 12-month basis, they went from a $2.7 billion loss at this same point last year on a trailing 12-month basis to now $30 billion in the plus. Incredible. Simply incredible. Segment results. North America. Look at the operating loss to income. I mean, this is phenomenal, right? First off, they did $105 billion in North America. That does not include AWS there. But they went from a $240 million operating loss in the same quarter last year to $6.4 billion operating profit, operating income. That's unbelievable. I mean, the change on a year-over-year basis is crazy. International has something very exciting going here, okay? Check this out. This is important. So, in regards to international, first off, their business is growing much faster international than it is actually in the U.S. That's good to see. But check this out. Operating loss. They lost $2.2 billion in operating loss in the same quarter last year. Now they got it down to about, a little over $400 million of operating loss. So what this tells me is operating profits are coming. And they're likely coming this year, in 2024. Seeing how much progress they made so quickly there, yeah, I'm feeling pretty confident and kind of seeing especially these two past quarters. I think there's a pretty high probability operating profits are coming here for the international segment, which then takes the international business from a situation where this was being a drag on the business to actually being a tailwind behind the business. From a headwind to a tailwind, that's a best possible situation, which is just another thing that's going to help Amazon's profitability go to the moon here. Okay. Now, AWS, this is the king business for them. Why do I call it the king business? Well, although it's not big numbers in terms of net sales compared to the international business and compared to the, traditional North American business, it's a king business because look at the operating income. It dwarfs all the other businesses. That's why this is a king business. And so operating income went from $5.2 billion in the same quarter last year to $7.1 billion. AWS is going to get a lot more exciting in 2024 and beyond. You've already went through all the companies out there have already gone through their cost-cutting measures of 22 and 23. So that's all behind us now. So now, looking in 24, it's all about just growth and growth and growth. And then you have the AI component tacked on here. That's just another leg of growth here. So AWS is going to go from, being pretty depressing story over the last, I would say, 2 years to actually a really exciting story over this next 2 years. And so that's great to see there. That is the king business for the company. Free cash flow on a trailing 12-month basis. This might be the most important chart I'm going to show you in regards to Amazon here. Okay, check this out. Q4 2022, they're at $11 billion plus negative free cash flow, right? To now almost $37 billion in this most recent quarter on a trailing 12-month basis of free cash flow. Now, the reason this is arguably the most important chart is not just because of that turn of about, we can call it about $48 billion turn there, which is crazy. But the other reason that's the most important chart is you got to understand the way Amazon stock is valued by a lot of investors out there. And how a lot of investors value Amazon is they value it based upon free cash flow. Now, personally, I don't value Amazon that way. I think about forward PE metrics. I think about where Amazon's net income's going over the coming years, and I make my judgments based upon that. But I'm a segment of the investor base. Another big segment is all about free cash flow, free cash flow, free cash flow. That's always been the talk around Amazon. And so when you see free cash flow go from that to this is going to excite a lot of Amazon shareholders currently or potential future Amazon shareholders. Okay, that matters big for Wall Street. Now, I also love this. No big dilution in the shareholder base, right? If you look at the shares outstanding, it's hardly moved. And so I love that because the one thing usually you could talk negative about tech companies is share dilution. Oh my gosh, they're diluting you so much. You're not getting as much as the profits as you think you're really getting because they just keep diluting you. And Amazon's kept it pretty dang steady over the past year. So I applaud the management team for that there. Now, check this out. Operating cash flow on a trailing 12-month basis, almost $85 billion. They're on their way to $100 billion plus in operating cash flow here, folks, okay? Insane numbers. Now, in regards to the balance sheet, check this out. Stacking cash. Over $73 billion in cash and cash equivalents now at this point in time, folks. That's insane. So they're stacking cash big. Look at stockholder equity. It went from $146 billion in the same quarter last year to now it's over $200 billion in stockholder equity. So love it overall. Overall, just great. Just great.